801, good morning. My name is Vince Lanci, and this is the almost to the AM roadmap. This is the gold fix, which leads into the AM roadmap for the opportunistic trader subscription audience, and as a courtesy to newsletter subscribers and uh, followers on the internet, on Twitter as well. You're looking at the cash gold 60-minute chart. If you want to extrapolate that to futures, add $2.20. That is cash gold right there. We're going to get into gold, what happened yesterday, why it happened. We did a trade based on a signal yesterday, and we're going to go through the stock market quickly, and we're going to reference the Op Trader overnight report that subscribers get. I think that's a great reference, and we're going to start using that. And we're going to go through where to from here in gold. We're going to keep it tight today. I think I say that every day, and every day it doesn't happen. But why don't we, while we're looking at gold, right? Why don't we just quickly go through gold in context of yesterday's markets? Stock started yesterday strong and finished very weak. That's all you have to say, but we'll say more. The S&P 500 range was 103 points. That's something we haven't seen since February. Stock started strong with it, but the Nasdaq was down and the S&P was up. And looking back on that, I'm sure Larry will have something to say about that in the roadmap. But my observation, as I was just speaking with Michael off the air and possibly partly on the air, was that Apple is positive cash flow, Netflix is negative cash flow. So you should just take the Apple A out of FANG and consider it a no longer a tech stock, but a safe haven. It's all relative, but you follow what I'm talking about. Apple's a Dow stock, not a Nasdaq stock in terms of its capitalization and its ongoing concern. Okay. So stock started strong, as I said. All right. So more trade news hit the wire yesterday. Basically, a report came out that said the United States would take more measures if there was no progress made at the meeting next month between Trump and, if I'm saying it wrong, probably Xi. Next month, if you're not familiar with this, the G20 is meeting, and there will be a sidebar meeting between the U.S. and Chinese leader to discuss the trade dilemma. And if nothing comes out of that, we're prepared to levy more tariffs on them. Stocks took it hard. Now, they may not have taken it as hard in the past. When you think about it, other products took it hard, like copper and palladium and gold and silver. But this time, U.S. stocks took it hard. So contagion is probably a word that might come to mind. But whether you think that our relationship to China matters that much in the short term, I don't. And but the market is now keying on that, which I think is, just basically a tipping point. It's been coming for some time. The midterms are coming up as well. So, any excuse to continue being nervous. And the VIX has told the tale, as we said. Okay. Gold broke the 1232 area. Now, if you remember, we gave that level on a 4-hour chart. And yesterday, right, that would be this area here, right? So that would be the 1230 area. All right. And we got short at 1227.70 because we waited for the bar to close. But the system told us that you should not be stopping out until 1238.50. I think the number was, and we did not. We had no patience for that, and we took a $3 loser yesterday for subjective reasons, and that is the problem. If you're going to use a discipline, whether it be subjective well, let's just say if you're using a discipline, then you must use the discipline and stick with it. You know, I had a system, and the system said to stay short below X price, and I ran out of patience. Call it trading with scared money, and I closed the position prematurely. And subsequently, the market is now trading 12, 20, uh, 3, 12, 24, 12, 23, 80, 12, 24, based on this spot chart. I'm putting a spot chart out because it gives me better uh, volatility signals that I translate into futures trades. Plus, this software here is great for charting, and it's great for my algorithm interface API. But uh, they charge too much for real time feeds, so I'll spend that money on the trading desk. Um, okay, so what happened last night is stocks started a little bit stronger, which actually was kind of interesting. I think that was uh, from Asia to Europe, softer economic numbers. So, for example, in Europe, there were some softer economic numbers, which I think was relief that they wouldn't have to worry about tightening. Uh, but that didn't last long, and the stock markets went from higher at 3 or 4 in the morning. I think I posted something on the chat on that, and looking to see if there was gold order flow, and then proceeded to reverse a little bit. But uh, what I do want to take you to is back to the 1 hour before we go through uh, what happened today. If you look just from a trading flow point of view, all right, midnight comes, right? 1 a.m., a little bit softer. 2 a.m., nothing. 3 a.m., market picks a direction. So between 12 and 4, the market picks a direction almost every night. And when it's higher, as it had been in the past, here we go on the 26th at 3 a.m., you will get selling in the U.S. That's happened almost every day that you look back. We've shown that in previous broadcasts. But when it starts out weaker, uh, uh, is it necessarily going to reverse? I don't know. But as of right now, I'm looking at a 60-minute chart right now. So that order flow that we had seen for 5 or 6 days in a row, or maybe 7 out of 9 days in a row, it's really hard to tell, uh, uh, hasn't come back the last 2 days. And so that's 2 days in a row that we haven't seen buying in that time frame. And consequently, subsequently, gold is lower. Uh, we have said that we think that the midterm elections have given a bid to gold and helped it stay strong in the face of a strong dollar. The dollar is stronger again, and gold is weaker uh, for 2 days in a row. That uh, we think is significant in that we thought that gold would hold up a little bit longer with the midterms. But that was just conjecture. The reality is we're just prepared for anything in terms of levels that are broken. So the midterms were the dominant factor, and they still may reassert themselves as we go into the midterm election. But you cannot ignore the fact that gold is was rallying alongside the dollar with no real uh, uh, panic crisis. By that I mean actual event as opposed to stocks selling off. And gold was rallying in the face of a weaker and weaker yuan. We put a chart up on that yesterday or the other day. It's in the report. Yeah, we looked through it yesterday. That was the orange line chart, if you'll recall. That showed a nice peg to gold that gold broke out of. And we want to talk more about that. Uh, uh, but let's go to the overnight report, which I think is actually going to help us out a lot today. All right. So for Tuesday, October 30th, all right, uh, opportunistic trader subscribers and people who sign up for the newsletter uh, get this every day. So here's our schedule for today. So you're on with me at 8. 8:30 is the AIM roadmap. Um, and then after that, we have special guests. Today it'll be Phil Flynn, uh, energy analyst for years. I've known him. I've known his work for 20 years. Back when I used to work with Peter Butel. 11 a.m. Some help for traders who are coming up with their own ideas and their own concepts. And at 1 o'clock, personal favorite Tom McEntee, uh, who is an options trader who trades volatility as well as direction, who likes to trade on earnings reports. Maybe he'll lean into the vol on an earnings report, but make sure he's stopped out. He does a lot of that type of uh, trading, and I have a lot of respect for his talents as well as his approach, which I don't do, but I respect it nonetheless because without him, I wouldn't be able to take the long ball. Okay, so here we go. We'll just read a little bit here. All right, global stocks were mixed to mostly lower overnight. Yes, we know that. That's true. The U.S. stock indices are pointed toward higher openings so far. When the New York Day session begins, on an upside correction following Monday's sell that pushed indexes to 6-month lows. Yes, there's still strong near-term technical evidence the U.S. stock indexes have put in market tops. Yes, I will add to that while they may have also put in short-term market bottoms by many measures, I don't think the market uh, has bottomed out yet. By that, I mean uh, you can't really say that a market is going to. I rarely see markets bottom on Fridays. That's just a comment. And I rarely see markets uh, bottom going into uh, uh, a month end. So I expect an addressing of some sort. I wouldn't be surprised if it went the other way, but uh, technically a little bit oversold, but in the bigger picture, far from oversold. Okay, there you go. In overnight news, the Eurozone reported. Okay, so basically you have softer numbers there. These are all things that should be uh, uh, should give create dollar strength. All right, as it relates to gold, create dollar strength and therefore gold weakness. Uh, the report Monday afternoon said that Trump indicated in administration will impose tariffs on all Chinese goods imported in the U.S. if the meeting between Presidents Xi and Xi Jinping in Argentina in late November, that's at the G20, did not produce results. And the news helped sink the U.S. stock market Monday afternoon. That's a very nice way of putting it. But I think it fell on it like a brick. But I think this is a professionally written article, so they're not writing for sensationalism. This is just a very good dry piece. Okay. The key U.S. economic data point of the week, if not the month, I agree, will be Friday's November employment report from the Labor Department. All right. Okay. Here's your technicals. Okay. Bonds and notes. We're going to basically say that bonds have not had a um, big effect on stocks. They may have been supported by people running from stocks, but I hate to see what's going to happen when they stop. It's 8:15. Oil has been lower. Um, First, WTI led with supply demand issues, uh, and or throttled demand or built up supply. I think late last week, Brent started to wash out a little bit, and I think that might have been symptomatic of European economy slowing down, and now WTI is dropping again. Grains, okay, so grains are higher overnight on more short covering. Uh, there you go. Harvest lows are in place. Okay, back to gold, so we can put this in perspective again. Uh, Basically, what we are looking at is two things I think that are important. And one is, as we go back to gold on the hourly, which is having a nice little, we'll call it pre-US open bounce. One, the peg to the yuan, which few people have been discussing. I am one of them, uh, but there are other people talking about it, or at least noticing and not talking about it. I don't think is one that's going to last long if the trade war continues further, and here's why. Um, uh, because despite the debasement of the yuan, despite China's attempt to offset their export price tariffs into imports into the U.S. the tariffs on their goods, when you really look at the currency aspect of it, the yuan costs, they're really not that big. And to put it in simple, very simplistic generalist terms, so much of their exports depend on their imports of raw materials. So um, their labor is not a big cost factor, and uh, labor's cheap in China. Let's put it that way, um, and that goes into a lot of issues. But staying on the economics of it, with labor a low cost, which makes them a low cost producer of products. Their domestic currency debasement is not really going to lower their cost of goods produced much at all. And this is my opinion, but I've talked to a couple analysts about this, and I was wondering uh, uh, how helpful it was for them to keep weakening the yuan. So, and the reason I asked that question is because couple days ago or yesterday, China started floating the idea of uh, tax um, tax rebates or lowering taxes domestically to help their own companies. So they're following the path of what the United States does. I don't really think the Chinese are very creative in economic solutions. They don't have a lot of velvet on their hammer, but they are very good at imitating. So if you know what the U.S. normally does, China will probably do that. The reason I say that is because uh, their lowering, debasing of their own currency has not really done much. I think the word is paltry. It has had a paltry effect if you do the math on offsetting the tariffs that we've levied. Therefore, they have to move to other measures, fiscal measures, maybe more capital control measures. These are wild cards in the price of gold. Suppose they let the yuan spike. What will that do to gold? Uh, it should make gold go up. If they continue to let the yuan debase, I think that gold will drop simply because they are tapping into some serious currency reserves in buying gold in U.S. dollars, and they're not the only ones. But this is a really important macro concept. But for a day trader, an active trader, this is what I would say today. We have had a breakout on the 4 hour. And if you were short and you got short at 32 and a half, as suggested, uh, or 32 and a half, or a little bit below that, trailing stops, you should let the market take you out now. I did not, I let the market take me out, but I was too tight with my stops. Uh, if you are already short, I would lower the stop to 29 and change. Uh, But if you want to be really aggressive in protecting yourself, your stop could be as low as 28. Now, this market could really wash out to 1208 if we get under 1220. Remember, 1220.70 was an important number for some time. It remains to see if it is important anymore. But as I've said a million times, gold hates the teens. That means it could bounce off of 19 and re-rally. That means it could skate through it, and we could end up at 1208 again. That's just a number for me. Again, uh, I will say this. Uh, do not ignore. I'm not going to fade a rally in gold because the midterms may reassert their strength on fear. But again, gold is not something you buy to hedge a stock market correction. Uh, uh, Gold is something you buy to hedge a protracted bear market that is due to debased inflation. It just should be the tagline of the show. Stop buying gold because stocks are going down. Buy gold because stocks are staying down. Volatility does not help gold to the upside. Volatility just makes gold more volatile. It's 8:20. I'm Vince Lanci. Stay with us for the AM Roadmap with Larry Benedict and an insightful analysis that will be, I suspect, very clearly key to volatility. If you are a volatility person, I'll give you a little uh, taste of, and you haven't listened to the roadmap, I'll give you a little taste. The VIX, while I don't personally believe it's a fear greed indicator, as you'd see little dynamic uh, optics on mainstream media, is, however, something that remains very important to watch and is one of the few, if perhaps only, consistent correlated thing to the market. That's not to say that the VIX is positively or negatively correlated. You just have to see how it performs. If the stock market drops and the VIX doesn't rally, then people aren't nervous for different reasons, and they expect it to rally. For example, last time we were down here, just to give you a little 1 minute teaser, last time stocks were down here, the VIX was at 29, and uh, collectively, uh, collectively, but more importantly, uh, the the founder of the opportunistic trader, Larry Benedict, and Market Wizard basically said, I don't expect vol to rally if we drop until we get through new levels. We were at 29 before, but now we're at 20 here. On the other hand, in a different statement, same segment, he said, well, the market's higher and vol's really not much softer. That would give me pause. Anyway, the point is watch relationships and see how they are. And uh, I'm not going to fade gold strength, but you should be short below 32 with a stop at 29 and a reversal above 32 again. Have a great day. This is Vince Lanci. Trade carefully.